Hey everyone, welcome to the Financial Information channel. In this video, I am going to give you an example on how to build a stock portfolio. But before I begin the video, remember I do videos about the stock market, personal finance, and how to make money online. So if you want to receive those type of videos, you can click on the subscribe and the notification bell. So I was contacted via Snapchat where one of the subscribers asked me how to build a stock portfolio. And before I give you a couple of examples of some stocks portfolio, I'm gonna give you some background. He mentioned that he's gonna be able to add around $640 each month. And in addition, his age is around the 40s. So that is very important. And one of the reasons why the age is important is you want to take less risk at that specific age. And I'm going to talk about the two examples regarding the stocks portfolio. Let's take a look at the first portfolio. And in the first portfolio, I would have Apple. Now the price for each Apple share is around $173. Now Apple had one of the best years in 2017. The revenue went up over 13% year over year. However, one of the most impressive things is the service revenue is over 18% year over year. And in my opinion, the service revenue, it is going to continue increasing throughout the next few years. Now for the number 2 stock in the first portfolio is going to be Monsato. Now the Monsato share price at this moment is around $125. And Monsato is one of the biggest companies in the agricultural space. And Monsato has been on the news during the last few days. And the biggest reason why Monsato has been on the news, it appears that the Bayer acquisition has been approved by the US. And Bayer is the German company that specializes in pesticides and drugs, and that deal appears to be approved by the US Department of Justice. Now for the number 3 company, we're going to go into the financial sector, and that's going to be Bank of America. And the price for Bank of America shares at this moment is around $30. Now I have mentioned that the federal interests are going to help the financial sector, and let me give you an example. And this example is what Bank of America had mentioned in one of the earning calls. And Bank of America mentioned that 1% interest, it is going to add around 3.3 billion of net interest income over a 12-month period, which is kind of impressive. So imagine the interest rates are going to increase the revenue for each individual financial company. And for the number 4 is a company that is well known, and that is going to be Walt Disney. And the Walt Disney share price at this moment is around $100. And we heard the news that Walt Disney, it is going to acquire Fox. And if that deal gets approved by the Department of Justice, that is going to improve the revenue for Disney. In addition, Walt Disney can acquire Sky News that is operating in Europe. And the reason why that is important, it is going to increase the reach of the Disney streaming service in the next few years. And the Disney streaming service plans to be released in 2019. And for the number 5 company, it is going to be an international company, and that is going to be Alibaba. And the share price at this moment for Alibaba is around $174. And Alibaba is one of the best international companies, and is located in China that has a huge growth potential. And Alibaba had over 34 billion of revenue during the last fiscal year. And the free cash flow is around 19 billion, which is impressive. And even more impressive are the sales. The sales are growing around 48% every year. And that is going to be the first portfolio. It is going to be Apple, Walt Disney, Monsanto, Bank of America, and Alibaba. And now let's take a look at the second portfolio, which is going to increase a little bit more risk. And the first choice for the second portfolio is going to be JP Morgan and Chase, that is going to be located in the financial sector. And the price for each share in JP Morgan and Chase at this moment is around $110. And just like I mentioned in Bank of America, the interest rates are going to help JP Morgan. Now one of the things that makes JP Morgan stand out above the financial group is that JP Morgan and Chase has a good return of equity and return of assets. Both of them are above the industry. One of them is about 10% and the other one is above 1%. And the second option in the second portfolio, it is going to be Facebook. And the share price for Facebook at this moment, it is about $166. Now one of the most important metrics is the operating margin and the profit margins. Facebook profit margin is almost 40%, and the operating margin is almost 50%. And in my opinion, the revenue, it is going to move down quite a bit after the latest Facebook scandal. However, the numbers are not going to drastically change over the next few years. Now for the number 3 stock in the second portfolio, it is going to be PepsiCo. Now many people know that the soda industry has been on decline during the last few years. However, PepsiCo has a good portfolio that doesn't include just sodas. PepsiCo sells chips and the revenue has been huge during the last few years. Just in 2010, Frito-Lay's, one of the products that PepsiCo owns, produced around $615 billion in revenue in 2017. And even though the share price hasn't moved in case of PepsiCo, it has a good dividend. But now let's take a look at the number 4 stock, and that company is going to be MasterCard. The share price for MasterCard at this moment is around $172. Now MasterCard is in one of the hottest industries in the stock market, and that industry is the payment system. During the latest MasterCard earnings call, the company announced that around 80% are still using cash. And let's pretend that only 70% instead of 80% are using cash. That still presents a huge opportunity for MasterCard in the next few decades. And now for the number 5 stock in the second portfolio, it is going to be another stock located in China, and that company is going to be Tencent. Now the share price for this moment for Tencent is around $53. Now Tencent went up a huge amount in 2017, but I think it still has a lot of room to improve in the next few years. Most of the revenue that Tencent did in 2017 came from gaming. However, Tencent started monetizing one of the social media apps, and that app is called WeChat. It is very similar to Facebook, and I think it's going to create a lot of revenue for Tencent in the next few years. So let's recap. For the second portfolio, we have JP Morgan & Chase, PepsiCo, Facebook, Tencent, and MasterCard. And that second portfolio has a little bit more growth, however it has more risk. And those are basically the 2 stocks portfolio examples. Please leave in the comment sections below which stock portfolio do you prefer, or you can leave in the comment sections an example of your favorite stocks in a portfolio. Remember, the total value for that portfolio has to be less than $640. So for example, you won't be able to include Google or Amazon since each share for those companies is above the price. And that is gonna be everything for this video. You can click here to see another example of some stocks that I have chosen in the past, or you can click here for another video from this channel. And in addition, you can click on the subscribe if you want to receive more videos about the stock market, personal finance, and how to make money online. I want to thank you once again for watching the video. Have an excellent day and take care, my friends.